And, you know, I ran across these guys talking about smart money concepts. You know, everybody explains it a little differently. So, you know, it began sort of a quest to kind of come up with a system that it actually made sense to me. And, you know, I quickly found out that, you know, there's no substitute for time, right? So you're going to find out that even after I explain things the way I explain them, it's still going to take you a little time. You know, you have to go to those charts and look at the charts on a daily basis. I'm not saying you have to live on the charts, but you do have to go and look so you can see what happened and confirm or reject what I'm telling you, right? And the things that I will show you. I'm by no means a professional, right? I found a system that worked for me. I was able to replace my job income, and you know, it's provided me time freedom. I'm not rich by any means. I will be here in a year or so probably, but that's a process that that will take place because I was patient enough to hone in, you know, on something that I saw, right? So we're going to talk about order blocks. Then next week we'll probably talk about imbalances and price action. Then we'll talk about Wyckoff. We'll talk a little bit about order flow after that. All these things are crucial to your understanding of the market, right? And I'm going to be the first to tell you that every trading method can be successful, whether you're trading retail, whether you're trading smart money concepts, or whatever. It's consistency that's going to make your style or your system successful. It's not what we think we know, right? You can build an AI, and an AI will be successful trading support and resistance because that AI will be consistent, right? Your win ratio might not be as high as somebody else's system, but you can be successful. This is like baseball. 30% will make you successful. And if you can wash, rinse, and repeat, and you take setup every time, you'll find a great deal of success, right? So I don't want you to be fooled into thinking that I'm going to show you something and you'll never lose another trade, because that's not the case, right? I lose trades. I've lost more trades during this war than I did leading up to the war. I'm sure I was probably high 80s from Thanksgiving until this war started, and now I'm probably in the 70s with a win-loss ratio. But I like to trade certain setups. I like the weekly setups. A lot of people never looked at a weekly chart, but we do that. I think the weekly chart is crucial to understanding what's going to play out in the market in the coming week. And a lot of times I'll get my trade setups off the weekly chart, and then I'll just run the trade over the next several weeks. So I'm gonna stop running my mouth. I'm gonna watch this video. It's about 20 minutes long. Once the video is finished, we'll come back and talk about what we saw.
Welcome back to another video. Today's video is going to be on order blocks and diving deeper into order blocks and finding out which ones work, which ones don't work, and a lot more. Yeah. So first, I just want to quickly apologize for not uploading recently. I've been really busy with school and other personal stuff I had to deal with. But I actually have a couple of weeks off from school right now, so hopefully a lot more videos will be coming out. So stay tuned for that. So let's get straight into this video. So the first misconception that people have with the order blocks is that you can only trade order block. You don't need to implement anything else. All they trade is, they just trade off of what they see, which is the order block here, order block here. And then when they buy and sell at these random order blocks, they get confused on why it didn't go their way. and etc. So let's actually explain, let's dive deep into why some order blocks work better than other ones. So just looking at this whole little bit of price action all the way from here, I want everyone to, do a case study of what happened in the past to understand what's going to happen in the future. So right over here on the daily time frame, what I can notice is that there was this range right after the market rallied up. It created a range of support and resistance. So let me just do this X bottom and then X top. So we created this range of support resistance. And as everyone knows,
Todd,
type of range are manipulation of the lows and highs, meaning that these support, everyone who's buying these support touches
Todd,
over here, over here, all these
Yes.
support touches, they just
I don't know if you're sharing your screen. I can't see. I don't see anything. I left out and came back in, and I still don't see anything.
I don't either.
Yeah, so you can't see anything.
It's generating liquidity. So the retail traders, every time they buy at these levels of support, that gets tapped multiple times, the weaker that level is going to get. So the next time the market touches that level, it's eventually going to break out of it and grab all the liquidity that rests below. So that's what ends up happening. The market takes that liquidity, and once the market grabs liquidity, it can do either one of two things. It can either continue going down and just sell off, or it's going to take that liquidity and then go up. Now, in this case, it takes that liquidity, and you can see that there's a lot of buying pressure. It's still going up. And the reason that the market is going to go up is because there's still liquidity of the high, of the resistance trader. So every resistance trader that was selling over here, they created more liquidity at the top. There's a lot of stop losses that rest above, but the market has to take out. So basically, this doesn't necessarily mean that, okay, buy right away. That doesn't mean that, okay, because there's liquidity here, buy. That just means it gives you an idea of where price is going to go in the next few days, maybe next few months. So you can see that basically price, moved up from here, it goes up. Now, if I were to extend this line, right, and we look at what the retail trader was looking at, by the way, when I say retail trader, I don't necessarily mean that I'm not a retail trader. I mean that from the retail trader perspective, strategies eyes, right? The retail traders that trade support and resistance, they're looking at this rejection right over here. And then look at this rejection as a sell confirmation to take that sell, because this is a level that's been tested multiple times. So this induces traders to actually take that sell. And when they take that sell, obviously it goes away for a little bit, but then evidently they get stopped out. So this is why it's important to map out your equal highs and equal lows to understand where liquidity is. Now, I'm going to dive deep into why this is an important level of structure. So overall, we just took the money, we took liquidity from the top and we're moving higher. Now, the fact that we're moving higher, we took all the money and, we're making higher highs, higher lows. This basically gives me enough information to know that long-term, I'm going to be buys on your USD, even though I might have a small little break of structure of this higher low right here. This doesn't tell me that I can look for sells now, even though, you could technically start looking for sells. Well, me, myself, I'm a long-term type of guy. I like to think long-term. I don't like to be in and out. I'd rather hold stuff for the long term and let my money / wealth, grow from there. So because I know overall long-term on Euro USD, we've just been, taking out the previous highs, making newer highs. I know that this move down, I'm expecting this move down. I don't need to capitalize on this position. Rather, I'll wait for this move down to be finished, and then I'll look for buy-side opportunities. Specifically, I do this because, there's a lot of manipulation that happens inside of this move. When the market is retracing and you're trying to enter on that retracement, you're going to see a lot of manipulation, a lot of confusion happen, and it's best to just stay out of those type of situations. So now it's time to map out my order blocks. And first thing first, before we start mapping out order blocks, I want to go explain what's the most important part in an uptrend. The most important part in an uptrend is obviously the expansion and the retracement, because that's how the market moves: higher highs, higher lows, right? Now, obviously, it's not going to look something like this. No market looks like this. Maybe on a line chart, but not in candles, right? But what I want you to understand is that inside of this expansion and inside of this, the finishing of that retracement, there's most likely going to be areas of interest inside of these levels. What I mean by that is at the start of this expansion, you might find an order block, and at the finish / end of this retracement, you might find another order block, and so on and so forth. What that doesn't necessarily mean that you're going to be using every single order block you see on every single expansion and retracement. The reason I say that you can't use every single one is because the overall, theology of how the banks trade is they like to buy when price is low and sell when price is high. So if price is this high, do you think that the banks are going to buy over here? No, most likely they're going to sell and buy when price is low. So if you see order blocks that are right over here or right over here, and maybe even over here, that doesn't necessarily mean that these order blocks are going to give you that 4,000 pip move that you're expecting. They may, reject off of it a little bit and give you a small little 10, 20 pip move, but don't expect something crazy. We'll go back down to the charts and I'll give you guys an example. So right over here, right over here, you can see that there's a pretty clean last down candle before the move up that gave us a continuation of structure. I see. Let me just quickly change that. All right, boom. So we have this zone right here. We have a zone of interest. This last down candle before the move up. You can see it comes into it. Doesn't really give you a nice entry. It just comes into it and starts moving consolidated, right? There's not much movement. And in an order block, when you have an order block, you don't want to see a lot of choppiness happen like this. Usually if you have an order block, you want to see price tap into it and move off it really quickly. When the market is doing things like this, where it comes in and it starts, moving really choppy, this basically tells you that, this level isn't too strong, right? A strong level isn't going to wait for people to enter in on. It's going to come into that level and move really quickly. Now, the reason that this order block right here didn't play out is specifically because there's no volume in it. And it's way too close to where price is at. Price was at right over here. Look, that's not a pretty big range, right? Like, sure, it's a 200 pip range, but it's too close to where price is at. So, like I said, banks like to buy when price is low, sell when price is high. This is way too close to the current market price. And secondly, there's no volume, right? Like this last down candle, there's a lot of wicks. And after the next candle, which was a really big candle, it was followed by, a lot of wicks. We don't want to see those type of wicks inside of an order block. We want to see imbalance. We want to see volume. We want to see liquidity. We want to see multiple things before we actually take that buy. So if I look a little bit below, we can see a much more cleaner example. We have this last down candle before that move up towards the upside. Now, the reason I like this one is because if you extend this line right here, this used to be a previous level of resistance, right? Where previous sellers in the market were looking to sell here. And like I said, this is that last down candle before the move up that actually caused this liquidity grab to happen. But because this is the cause of the liquidity grab and this is the last down candle, my main area of interest is going to be this daily order block. So what I like to do is I mark up the open of the OB and the low. And for me, I just call this like my daily IC. I'm not going to dive onto the 4-hour time frame because by this, by now everyone knows how to mark up your OBs. So I'm going to try to stick to the daily and the 4 hour for now. So the market, let's play the market. And one more thing, when you are marking up your order blocks, don't just look at this and ignore what's happening here, because what's happening here is really, really important to what's going to happen over here. For example, a lot of people might not realize it, but there's liquidity here, right? There's equal lows being created where retail traders are looking to buy at this level of support. This doesn't necessarily mean that this level of support can't give you trading opportunities, because you can definitely capitalize on movements from here to here, which that's a really good 138 pip move. But me, as my style of trading, I like to wait for the market to manipulate the people that are buying the support that's been tested multiple times, and then enter off of that when everyone stopped out. So in this case, there's an order block below liquidity, and that's a really good sign. The sign is that if there's an order block below liquidity, that's a really good sign, because for most of the time the market takes liquidity, it takes that liquidity and then it goes up. So this is why this area of interest is much more valid. Now, if I drop down to the 4 hour time frame, you can see that there's a lot of volume in this candle as well. By volume, I mean, look at how big this last down candle was and look how quickly it moved back up compared to right over here. There was this last down candle with a lot of wicks. It did move up quickly, but then look how slowly it moved back down. There's not a lot of volume. Compared to this situation, the market created this last down candle and then it moved up, and there's a lot of volume inside of this area. So at this point, what you could do is wait for price to come into your level of interest. And boom, it taps into our level of interest. Play the next candle, and let's see if we get a trading opportunity. Now, some traders, they like to set limits right away, right, with a stop loss at the low. and they just buy right away, and that's fine. If that's what your trading style, that's fine. Me personally, I like to wait for a little bit more confirmation before I actually take that buy. So I would personally wait for a break of structure and then a retracement. So right over here, you can see that this movement down, I'm sure there's multiple lower highs that the market created. Let's go to the 1 hour time frame to see. And right here, you can see the market created a bunch of lower highs that eventually it broke. Right here, there's one, here's a second one, and then here's a third one. So we have multiple breaks of structures that does indicate higher pricing movement. So let's go back to the daily time frame. At this point on the daily, there's a clean OP right here. I'm sure you can mitigate this, or sorry, not mitigate, refine this on the 4 hour, but I'm gonna try to keep this video short, so I'm not gonna do that. Let's just say we're entering on the open of the OB, stop losses at the low, and you can literally just target the next high. It wouldn't, obviously, it wouldn't look something like this, right? I'm sure we would have a much more better risk to reward ratio. Well, I'm just trying to give you guys an overall idea of how I enter on this OB and why we use this order block instead of this order block. The reason we use this one is because there's more volume in it. There's imbalance in it. There's it was below a level of liquidity, and it was, you know, it wasn't too close to price. It was in a nice distribution, sorry. It was a nice discounted zone. So that's about like 4 to 5 confirmations we have. So that was a decent, you know, trade right there that you caught. And overall, this is one more thing I want to say. Overall, we caught a pretty decent 196 pip move. One thing that people will tend to do is they will say that they'll set their take profit at somewhere high, like here, 389 pips. You have to make sure that you're targeting the next high. I'm not talking about this as your swing point high. I'm being literal. Target your next high if you're not too confident in the trade. Because let's analyze the structure of what the market really did. It pushed up and it started moving down really slowly. Because it's moving down really slowly, we know that, you know, sellers are slowly entering in the market, and this signifies that lower pricing. The markets want to bring the price lower, and we also broke structure. So this also does indicate that the market wants to bring price lower. So at this point, you wouldn't want to target nothing crazy. Just target the next high that you see, and in this case, it would be right over here. So that's a good idea of why we use this order block. Now, like I said before, the most important part in a downtrend, in an uptrend, is the higher low and the expansion. Right over here, we can see we have a high, higher low, high, higher low, and then another high. On the daily time frame, on the 2 daily time frame, you can see that there's a really clean down candle before this huge expansion towards the upside. The reason I like this area of interest is specifically because there's a lot of volume in this level, right? If you go to the daily time frame, just off of the 1, you can see that it is really nice movement back down and a really quick movement back up. And I'm sure if you go down to the smaller time frame, you can find some type of imbalance inside of here. Maybe you can refine this even more. But like I said, we're going to stick to the daily time frame. So what confirmation do we have for this? Well, we have imbalance in it, obviously, on the lower time frame. We have a lot of volume in this order block, which we signified on the daily right over here. You can see that there's a really nice movement back down and then a huge expansion move back up. And the way the market works is fractal. It comes to levels that had huge pushes. So this is the biggest move that the market had, right? And the fact that we're breaking past previous structure, we made a high, a higher low, another high, and now we broke past this. This ultimately does tell you that the market wants to bring price lower in order to go higher. Because if the market didn't want to bring price lower at this point, it would have just reacted off of this order block and completely went up, but it didn't, right? So this is certain things that you have to understand and, you know, take account that if the market isn't going to react off of this order block that much, it's most likely going to be reacting off of a different order block. So, and by the way, you wouldn't want to be focusing on this one or this one, because like I said, it's not clean. You want to be focusing on clean volume order blocks. So we have this, our higher time frame point of interest marked up. And from now, all we're doing is just watching structure. What happened right here? The market created a low and then it made purged that low and made a new low. Like I said, this is the market maker telling me that it wants to bring price lower. So all we're really doing is waiting for price to come to our area of interest, and boom, it comes in. So from here, let's go to like the 15-minute time frame. Let's just see what the market really did over here. Let's see if we could capitalize on any opportunities to enter here. So market taps into our area of interest. and it's selling off. Now, one thing I want people to keep in mind of is just because the market comes in your area of interest and rejects just like it did over here, this doesn't mean that it's going to go up. Make sure you're waiting for the proper market structure to form before you actually take that sell, or sorry, that buy, depending on where you're in the market. In this case, we have a low, lower, high, low, lower, high. The market is just creating lower, lower highs. Finally, we have this big push towards the upside, right? And like I said, the market is going to target the areas where it had big pushes towards the upside at. So right over here, we can say right over here, this is where the market had a lot of volume. Not only that, but it also gave us a break of structure right over here of a previous lower high. Now, if you go towards the 1 hour time frame, I think it was, or maybe the 2 hour. By the way, you want to use every single time frame you can. Yeah, the 4H. You can see that there's a really clean 4 hour down candle before the move up. Right, let's go back to the 15-minute time frame. And boom. So this is your 4 hour last down candle. This is where this is started. Now, if you go towards the 2 hour time frame, I think it was, you can refine this a lot better. There's a clean imbalance right over here that the market is going to tap into. So what you could usually do is have your entries at where the imbalance was, right? So let's go back to the 15-minute time frame and let's analyze what just happened. So let's go back up to here. So boom, it did tap into our 4H OB, which was somewhere over here, but then we noticed that there's imbalance over here. And if you check the 2H time frame, there's a second OB. So all we really did is we implemented imbalances, and we implemented market structure, and we implemented a higher time frame to the lower time frame. Now, what am I noticing now? Well, I'm seeing that there's liquidity generating just like before. Right over here, you can see that there is equal lows being created, right? And after those equal lows were created, we also had our, like I said before, imbalance right over here. So equal lows above and below a higher time frame point of interest is really, really important. And not only that, on the 5 minute, look at this really clean OB. Well, that's besides the point. So at this point, all we're doing is we're waiting for price to purge the equal lows. So this could take some time, and there we go. So it purges the equal lows, and this is our entry right here. Now, if you go to the 5 minute, I think it was. So if you go to the 5 minute time frame, you can see it tapped into a 5 minute order block. So an order block inside of an imbalance, right? And remember, the question was, which order blocks do I use? Well, this is a perfect example. This is a 5 minute order block inside of imbalance on a higher time frame imbalance. So this definitely, and this is also, below a level of liquidity. So this easily makes this order block 10 times more stronger than a previous order block. And this is where your entry would be. Your stop loss would be just the low. Your TP can either be the high, or you can target like somewhere else, maybe, if you're a swing trader like me, I would like have a crazy target like that and just hold it long term. And then, let this play out. See how this plays out. As you can see, it moves up really nicely. On the daily time frame, let's just run. And we'll obviously take profit, got smacked. So I just want to quickly go over this one more time. We had our second daily time frame order block. Market came into our order block. From here, we went to the 15-minute time frame. On the 15-minute time frame, all we did was wait for bullish structure to form. If I saw something like this happen where the market breaks structure, but I don't see bullish structure and it does something like that, like this, we break structure, but it continues going down, I wouldn't take the buy. I need to see proper bullish structure form before I actually take the buy. And in this case, we had that, bullish structure. We broke structure, and then market created a high and then a new high right here. So we created a high, a higher low, and then a higher high. So this is proper bullish structure. We saw that there's liquidity here. And then we went on the 5 minute time frame. And on the 5 minute time frame, there was a really, really clean last down candle before the movement up. And it was also inside of imbalance. And one more thing I want you guys to understand is that this order block was at the low. It was at the bottom of the expansion. It didn't happen over here. It didn't respect this order block. It didn't respect this order block. Because look, the criteria is there. We have the volume. It's really clean. The volume really clean. But it didn't respect this order block, nor did it respect this order block. It respected the order block that came at the low of where the expansion first started. And one thing that I myself do is I take my fib, I have my levels tool, and from the low where the expansion first started and take it to the high. Now, if the order block is inside the 70, 78, or 88 percentage time frame, or not time frame, sorry, percentage percentile fib range, that's a lot more confirmation right there. If the fib, if the order block is somewhere like in the 80, 60, or 7, you're not 70, sorry, the 15 or 50, don't take it. Make sure it's in the blue zone, and that's when you take that entry. And as you can see, at this point, the market just completely flew from there. All this happened, all this, the cause of all of this was simply our daily time frame OB, which was right over here. So I hope you guys took some notes on this. Remember, the OBs that have the most volume, that have imbalance in it, liquidity, market structure, these are the type of order blocks that are going to be the most successful. And remember to trade with the overall trend, implement other things like market structure, liquidity, like I said before. And things like these is really simple. For me, I had some trouble with it, but after a while, I slowly started to get a hang of these type of things. And yeah, so if you guys have any more questions, please leave a comment below. Yeah, like that's basically it. Thank you and have a good one.
Ooh, child. That was a lot of information.
I'm Merritt Black, head of futures for S&B Capital.
All right. Drop a 2 in the chat if you understand. Can you go out and trade those order blocks? All right, that video was an older video. It wasn't a current price chart. It was it's a little bit older. But the concepts of what he was talking about are 100% accurate. Okay. It was a lot. So, I'll ask that question of whether you guys could go out and trade that. That was me being facetious, right? So in that video, he said a lot, right? So I want to go to an active chart. Here's a daily chart of UJ. It's a real chart. Just to kind of talk about some of the things that he was talking about. We look at UJ. This chart dates back to January 13, right? You have a lot of information. The market pushed from somewhere, somewhere down here. Market pushed up. You have what you guys, I guess, termed in Ruby's class consolidation, right? We don't call it consolidation. This is either accumulation or distribution, right? Accumulation means it's accumulating orders to go up, and distribution means it's distributing orders to go down, right? So you have an accumulation down here. You can find these in the Wyckoff schematics. We'll talk about that in this course over the next few weeks. So you have a Wyckoff accumulation schematic. You have one right here, then it comes up, distributes, comes down into another schematic. It's a little bit higher. Then the market explodes up. This reaccumulates, goes up, reaccumulates, goes up, distributes, falls down, right? So let's talk about it. In the video, he talked about order blocks in areas that have a lot of volume, right? The most important thing that he said was you look for the order blocks in places where the market breaks structure, all right? So if you understand market structure, you'll understand that that's a level of structure, right? Once the market breaks it, comes back down, you can find the order block responsible for this break of structure. You'll be on something, right? So I don't see it on a daily. I'm going to stay on the daily because that's what I trade, right? He calls it refined, but if you drop down time frames, you will be able to find an order block right in here. And that's what this tapped into. Okay, you'll just have to kind of trust me on it. We will see one on the daily, but that's what this market comes back, taps into that order block and shoots up. Oh, by the way, if you throw the fib from the beginning of this move to this high, I want you to notice price comes right back to the 78.6 before it gets the hell out of Dodge. I learned a lot of my information from a guy named Inner Circle Trader, Michael Huddleston, ICT. So a lot of the things that I'm telling you are basically regurgitations from what I've learned and heard him say, right? So if you want to know the source, you can just start looking at ICT stuff. He's very wordy and he talks pretty slow. So a lot of his videos are 2 hours long or whatnot. But, you know, if you want to learn, you know, maybe you don't want to learn right now, but, you know, maybe in the future, sometime you'll start looking into it and say, hey, man, I'll be better served by going to the source. That's where we all get this information from. He'll better explain that these are all computer algorithms that are driving the price and all that good stuff. Sometimes it's easier for our brain if we view it as a transaction in a supermarket where we have actual buyers and sellers. I don't want to get into the weeds. I kind of want to keep this very simple because a lot of the videos that you're going to watch are going to be things that go over your head initially, okay? So instead of me trading this and trading like this and then waiting, because you see how this broke structure, instead of me waiting on the daily chart, I want you to notice that this break of structure here was January 2016. So instead of me waiting from January 2016 until March 2020, 4 years for this market to come back, right? Although you could do that, but instead of me doing that, there is a more simple way for me to show you how to make your money in this market, okay? So all I did was take the concepts of the order blocks and I made it even more simple, okay? So let's look at this price action from January of this year. Okay, market structure is everything. So I want y'all to pay attention to this low. This low. This low. This is called a swing low, right? Anytime you have a low surrounded by two higher lows and it's on a daily chart, that's a swing low, okay? The same way that this is a swing low, right? When you have these swing lows, all right, you expect the market to climb, right? So this swing low would have failed. I mean, it still climbed, right? It still climbed before it pushed back down. But if you're looking at the overall picture, when you have these swing lows, I want you to notice all right, as a retail trader, you'd have said, okay, it's trading in a channel, correct? So the market structure is still important, right? You have a swing low, but you still have lower highs, right? In this case, you get the swing low and it's never broken. The highs are getting higher, right? So when you get this swing low, the reason why this swing low is important to me is because of this move right here, from here to here, right? Let me delete this retail stuff. But this move should have perked everybody up, because before this was a high. So now you have a break of structure, a BOS, right? Once you get this move and it broke structure, now if you understand market structure, you understand that we're about to start going higher. And this would have been the point at which you started looking for bullish play, bullish order blocks, okay? Now, let's talk about a bullish order block. There are many different ways to use order blocks. And there are many different types of order blocks, right? I only teach a simplified version of it, right? It's by no means the only version. I know a girl who's very successful. She uses these order blocks where they're reversed, right? The down candle is bigger than the green candle. This is her version of an order block. And she trades, this is an order block. I'm not going to say it's her version. She teaches to trade off of these order blocks. I don't, okay? So because you're in my little Discord, I'm going to teach you how to use the opposite, right? The smaller red candle and the bigger green candle is called a bullish order block. That tells us the market is going up. And the smaller green candle and the larger red candle, these are bearish order blocks. And they tell us that the market is going down, okay? So generally speaking, as a swing trader, you want to take your entries on the daily chart, right? Sometimes the weekly, but you know, if you take it on a weekly, then most people would call you a position trader, right? But I'm just going to show you kind of how I view these markets. So in this case, January 21st, there was an opportunity. It was a great opportunity because of the setup I just showed you. You would have highlighted this red candle, which is the order block that I'm interested in, right? And as a trader, what's important to me is this very next candle, right? Once you highlight this order block, your entry is right there. That green line is your entry. This red line, if I can get it there. That red line would be your stop loss. Now, before you hammer me and tell me how big of a, how many pips this is, it's only 33 pips, so it's not really bad to take a daily signal on a 33 pip move. It's a 1 to 5 to these highs right here, right? Now, obviously, we have the gift of high insight here, where the market ran all of these, right? But if you understood from the daily chart that we had got an explosive move here, the market came back to the area, now it's going to push up, then you could have targeted any of these highs right here, right? You could have targeted all the way up here, even higher than that, right? Not to say you would have gotten all of them, but you could have targeted them. And as you can see, this trade right here would have paid for your life, whatever your life is. You know, I mean, this is the gold rush right here. Right now, it's running at over 2,000 pips. Now, I'm not going to teach you how to get 2,000 pips, right? You probably won't get those 2,000 pips for the next several years. But what I'm showing you here is that if you trade with order blocks, right, and you couple that with market structure, you're going to be on the right side of a lot of these moves, right? And there's also re-entry opportunities, right? There's an order block here, there's an order block here, which didn't tap you in, right? If an order block does not tap you in, then don't worry about the trade. Just look for your next opportunity. You'll find out eventually as you start studying these things that the price will come back to this area, right? Price is going to come back to this order block. This order block, if you notice, this order block is responsible for what? This break of structure. Got a break of structure right here. So in this order block, eventually, you know, y'all will be very rich by then. Eventually, this price to come back down and tap that order block, right? And keep pushing up. So all of this stuff happens over, you know, over a course of time, right? Days, years, months. And the market is fractal, right? A lot of people said that. I think he used the term fractal. It was a little bit off. What fractal means is you'll see the same thing on every level. If I'm on a 2-minute chart, I can see the same move, right? It's just, these are 2-minute candles instead of 1-day candles, which means that this move may have happened, I don't know, in a 2-day time period. This might have taken 2 days instead of 10 years or whatever. But you can see the same thing on the monthly. You can see the same thing on the weekly. You can see the same thing on the 10-minute. You can see the same thing on any level. You'll also notice that smart money traders always talk about refining, right? Dropping down time frames, making up their own time frames. I had never heard of an 8-hour time frame until I started Smart Money Concepts, right? I had never heard of a 5-hour time frame. You can type any time frame in here, 18 months. Any time frame that you want to look at, you can type in, and you're going to get the same sort of action from these time frames, right? You still see order blocks on every time frame, right? If my tools will work today. I don't see a tap in from these order blocks anyway. So, but if you're trading these time frames, you're still going to get the same type of move. And oh, by the way, you see this reverse head and shoulders from Ruby's course? So I just want you to understand that it doesn't matter what level of trader you are. It doesn't matter what time frame you use. The order blocks are going to be present on that time frame and on that chart. Order blocks provide you with a clue of what's going on. And we call these order blocks, or whatever, this area right here, right? This is an order block. It's the market is going up. You get a sell candle in the middle of the up range. This is another bullish order block. Right? market doesn't tap into it. Now, this order block right here, this is only, if you drop down time frames, we can see in here, this is a reaccumulation, right? Just white call playing out. The market came up, it sold, you know, it, let me put air quotes around this, it consolidated and then it pushed higher. So if you drop down in your time frames to that area, you'll see exactly what happened. Market comes up, consolidates. Let me see if I can drop down a little bit further. So that's a good question, Brittany. I don't discard head and shoulders. You know, a lot of that stuff for all intents and purposes will play out, but it's not what I notice first. I look at the order blocks and market structure first. You know, inverse head and shoulders, yeah, it's going up, you know, or a double top. A lot of times the market is coming down, but every double top and every inverse head and shoulders doesn't necessarily mean that the market is going to go up or down, right? At the end of the day, the market structure will tell you, you know, what's going on. And a lot of times what happens as traders, this can be smart money traders, you know, any trader at the retail level, we can get so dialed into our specific time frame that we miss the clues and the signals on the higher time frame of what's going on, right? So because I'm way up here, you know, on the weekly, I have a slight advantage over traders who only use the 4 hour, right? Because I understand at a higher level of what to expect from the market, right? Like I see this gravestone doji candle. I knew that the wick had to be filled. All of those things are important. You know, on a 4 hour chart, you might not see that we had a gravestone doji and that we had a wick to be filled, right? You might not see that this price is back at this order block that what broke structure, right? See that break of structure to the downside? What the price came back to it. The same way he showed us the price was going to come back to it on the upside, right? Oh, by the way, nothing just goes straight up. If I take and I fib this move from here to here, as a trader, I understand I need to see a pullback at some point. I need to see the price. I need to see the market pull back to the golden zone or maybe even the 78.6. I mean, that's trading one-on-one. So don't be fooled into feeling like, you know, the price is just going to keep bubbling up. I mean, it will keep going up, but it's going to respect how markets move. And your next big move as a trader should be watching for this thing to start pushing down, because you understand, one, how price moves, and two, structure, right? The structure point, this move was initiated from right here, right? Price is right back there. The same way you saw when this move was initiated right here and price came right back. Now you start seeing a push in the opposite direction. So I suspect that we'll start seeing that here shortly. And a lot of times you need to see a run on liquidity, right? The price is up here. Let me see where these highs were. Okay, so these are the highs right here. So we could see a wick that breaks these highs, right? And if it's a wick, trust and believe we're gonna get an explosive move down, right? Because that's what happens. On his chart, he showed something that was very interesting. Anytime you see a wick take out a swing high or swing low, let me go to USD CAD because that was a recent one for me. Anytime you see a swing high or swing low being taken out on the daily chart, again, these are not my rules or my concepts. These are ICT's concepts, but I can tell you I've made a lot of money from his concepts, right? Anytime you see this happen, swing low, wick past the swing low, you're gonna expect to see the gravy train going this way, right? And you can target these highs right here, right? You wanna see all of these highs right here get liquidated. So if you go back and you look at on your daily charts, whenever they've liquidated, if they wick past these highs, you get an explosive move, right? It's something to pay attention to. You have a swing low right here, you get a wick, and then you get an explosion. So we got one on USD CAD. We also got one on NZD USD last week. These moves are just starting. Swing high, wick, liquidation. Okay. These are very basic concepts, right? I don't know if you guys know, but I did a order block video. It's in the education folder, and it's going to explain to you how I see and how I use these order blocks. I think you have to be a pretty advanced trader in order to wait for the price to come back to your area of interest. But there's a simple way that we can use these order blocks right now, and you can make a decent amount of money doing it. So let me show you. This market is starting to go up, right? So on this daily chart, your participation or your entry would have came right here, right? You'd have had this order block. The next candle taps you in, right? There's your entry at the top. There's your stop loss at the bottom. There's your push up, all right? Your take profit would have been right here, these highs. You could have targeted the wicks. I always do the body, okay? You don't have to be greedy. You're gonna get your pips, trust me. This move would have been 88 pips. If you had been a gambler, you could have got 112 pips or 110 pips, right? Then the market would have pushed up. Now you get this wick. We call this trade, we call this one and the UC trade in our swing traders meeting at 5 p.m. We'll catch these pips. Here's two bearish order blocks. It didn't tap you in, so don't worry about it, right? If the next wick doesn't put you in the trade, it's not your trade. Let it go. This right here, this would have wicked you in. You'd have won this trade. It's a simplified version of trading order blocks, but it's a safe version of trading order blocks. And this will boost your win ratio significantly, right? Bullish order block, Next candle taps you in, you win this trade to equal highs. If you're a gambler, you can go to the wicks, but you win. So these trades using the order block system work. They're not designed to give you the full move, but this is kind of like baby food, right? When you start learning how to trade order blocks, I don't even really want you to consider where the market is starting from and where it's coming back. You know, when you first start learning, the best thing for you to be able to do is identify the order block, identify the trend and which way you want to take the market. Once you see the order block, you put a box around it, you get the tap in, and you can ride it down. Understand where you need to target for your take profit, right? It's always going to come from the next low. That might be take profit 1, take profit 2, take profit 3. Don't ever be greedy. Take what the market gives you. I saw Will in here. I think Will is the same way when it comes to trading the indices. Sometimes you're going to take profit 3. Sometimes you're not. A lot of times you're not, but you will always get this first level right here. All right. When you trade smart money concepts, if you get a 1-to-1, take it. Take your 1-to-1. It's 1% more than what you had when you started. Okay. I personally trade 1%. I know a lot of people are more risky than that. You know, maybe that works for them. For me, it doesn't. I'm a 1% trader. It's done me wonders. And, you know, I trade a prop firm account, so it's kind of like my job. You know, since I don't have a job, I have their money, right? They pay me. You wouldn't go to work drunk, and I wouldn't risk more than I'm willing to lose of their money. So I trade like this, you know, and I trade a combination, right? The simplified version of order blocks, I'll trade, but I also trade the retaps, right? So I'll trade a retap of an order block. If this came in and tapped, I'd have definitely got in. In this scenario, all it did was fill this imbalance. We'll talk about imbalances either next week or the week after. We'll cover imbalance and price action. Once you understand that price always comes to either fill an imbalance or tap into an order block, then you'll have the advantage over the market and you can wait for your setup, right? So when this move happened and the structure was broke, somebody was waiting for the price to come back, right? This happened on August 23rd. They got their action in September, right? And you might say, well, how the hell do you know? Because you set an alert, right? I mean, once this happens, you see the imbalances. You mark up your order block. You could also mark up your imbalance. Price comes right to the 50% mark of this imbalance. You're in the trade, you made a lot of money. And because the trade came from here, you could trade that right back up there. So once you understand how to trade and how, you know, what to look for, if you're a riskier trader, you would have just put your stop loss at the bottom of the imbalance. If not, if you were a less risky trader, you could have covered the entire order block and targeted right here. It's still a 1 to 5 trade if you cover both. It's a 14% gain, 15% gain if you only cover the imbalance. But if you understand what to look for, and if you understand how to go about looking for your setups, you'll make a lot of money. But until you get to this point, you're just going to be interested in this order block and whether or not this candle taps you in. If it doesn't tap you in, don't worry about it. We trade every pair. Trust me, every day that there's a setup, right? It may not be an NU, right? It may be an EU. It might be an EJ. So it's just something that I would encourage you to kind of, follow as far as looking at the charts every day, identifying your order blocks and putting a box around them, right? Just do it on the daily. When we meet up for the weekly, we'll talk about the setups and, we'll do a little market analyzing. But for you beginners, if you just start marking up your order blocks this week on your charts, we'll meet back up next Sunday, same time, and we'll talk about imbalances and price action. And we'll kind of tie those two together. And then we'll have two pieces of the smart money concepts. Then we'll get into Wyckoff, which is a little bit longer. And it's a little bit more in depth, but I think your knowledge will be greatly expanded by the time we start talking about that. Do I have any questions over anything we covered? Anyone? Bueller? All right, so if you guys think of something later, hit me up in the chat. If you want to look at that video, please go back and watch it. Let me see. It was Track FX.
Hey, what's going on, guys? Welcome back to another.
Everything you need to know about order blocks simplified, okay? Track FX. And this is recorded, so I will drop this in the recorded Zoom folder for you guys. Just give me some time because right now there's a swing traders meeting. I mean, you guys are welcome to stay if you want, but the swing traders are gonna, I guess, talk setups. I'm gonna stop the recording, so it won't be like a 2-hour video that I have to upload.